Hello, everyone. Good morning, and depending on whatever time zone you're tuning in from, good afternoon and good evening. Welcome to another promising edition of our Forex Morning Mastery as we come together to prepare and, of course, to review how well the assets we've monitoring so far this week have been doing, and, of course, prepare ourselves for the second half of the week. Well, since the beginning of the week, we have been monitoring three financial instruments, which includes the USOILSPOT, the USDJPY, and the XAUUSD. And of course, we've had some fair start to the week, let me say. Not until yesterday we saw a little bit of change in dynamic as the uncertainty in the market increased. And prior to today's trading session, we've had some twist to the market dynamic where there is some positivity in the air surrounding the US dollar, where the dollar is experiencing a modest rebound from its all-time low as traders reduce bearish bets ahead of the Federal Reserve's policy decision. Then we also see the ongoing geopolitical tensions in the Middle East, the US-China trade concerns, which obviously may likely increase demand for the US dollar as a safe haven asset. However, despite all of this, the chances that market are pricing in three potential Fed rate cuts for the year is very, very high, putting a little bit of skepticism into the US dollar market, which may put downward pressure on the dollar as well. Then, if we look at the US economic situation in the last couple of weeks, based on the reports we've seen, there has been slowdown concerns as traders are increasingly worried about slower US growth due to aggressive tariff policy under the Trump administration. Will this cap any potential rebound on the US dollar this week? Well, we are going to be taking a quick look at that when we go into the chart. Now, before we go into the detail, I know there are some of us who are joining us for the first time, and let me intimate you of what this is all about. This is the Forex Morning Mastery, where we come 3 times in a week, coming together to have a deeper understanding into the behavioral patterns of market participants. It's important to also note that this is not a signal service platform, but instead an avenue where we come together to have an understanding of what is going on in the market with the utmost intent of strategically positioning ourselves for the next move. So once again, for those of you who join us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. Feel free to engage in the comment section if you have any questions as regards to the commentary or any concerns as regards to the financial market. Feel free to drop them in the comment section. So with that said, here we will be diving right into the business. Hold on a second. I think I'm having some issues here with my screen. Please give me a moment, please. Okay, I think we got that sorted. Okay. All right. So, as always, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And though we started the week on a very, very strong note, remember we were buying the USOILSPOT at the beginning of the week, and of course we saw price move over 130 pips move before the bearish momentum began during yesterday's trading session. And this can be attributed to the potential temporary pause in energy infrastructure strikes between the the Kiev government, that is Ukraine, and then the Russian government, based on the discussion between Trump and what's the name of the Russian president, Vladimir Putin, yesterday. They agreed on a temporary pause in energy infrastructure strikes, and this probably could raise the possibility of increased Russian oil exports and pressuring oil prices. Of course, we know that when there is increase in supply, there is a high chance that price may likely drop significantly, and due to this development we may see the price of crude oil drop. So, and this we've been seeing the traces of this yesterday, where we saw this significant move to the downside. How many pips that is? That's about over 200 pips to the downside since yesterday. And then we also have if a broader ceasefire gains traction, that is between the Russian and the Ukraine, Western sanction on Russian oil could be loosened, further increasing supply and weighing on oil prices as well. Then we also saw the AP high crude oil stockpile report from yesterday, where it reported a 4.59 million barrel increase in US crude oil stockpile, which suggests there is weaker demand. That is, supply is much more than demand, so they were able to keep crude oil, and this obviously added downward pressure to oil prices. However, if you look at the structure we have right now, you would have noticed that price action is back into our key level at the $66 area. And remember, at the beginning of the week, we were able to spot this area as a strong demand zone. This area has been a strong buying niche for a very, very long time, where we saw how sellers had found it difficult to break through that particular structure. Now, with the way price is back into that key level, will it be a platform that could send price rising back up again, especially in the midst of escalating tension in Gaza and the Red Sea region? And of course, we saw Trump's threat of military actions against the Houthis and Iran, and this obviously could heighten supply disruption risk, supporting oil prices. Now that we are at a very crucial juncture, which is known to be a strong buying niche, could this be all we need to start buying the crude oil? Then besides this, if we are going to be placing any aggressive bet, if the market is going to be placing any aggressive bet at this point, they will definitely want to wait for the outcome of the FOMC minutes, FOMC interest rate decision coming up today. Definitely they will want to wait for that to happen before making any informed decision. Of course, we know that the US crude oil is a US dollar denominated asset, and any form of hike could increase the value of the US dollar, making the US crude oil commodity very expensive to buy. And if the current rate is maintained, we could see a little bit of traction in favor of the US crude oil. And if we look at what the market expectation is as regards to the FOMC, the Fed interest rate decision, there is a 99% leaning towards the Fed maintaining the current interest rate at 4.5%. So we look forward to see what the actual data will be on that one, as it's going to be playing a significant role in directing the current price movement. So, and also besides that, we are also going to be paying attention on geopolitical developments. Any escalation in the Middle East could drive oil prices higher. If tensions worsen, a breakout trade above this key level could be an opportunity to join an uptrend move. And of course, the idea of selling is also very there, especially the bearish supply side pressure, that is the increased Russian output and inventory builds, suggests that oil prices may struggle to sustain gains. So if we are going to be looking for selling ideas, I want to be joining a bearish move below the $66 area. So at this point in time, we are at a critical juncture where I want to monitor how price action will play around this key level around the $66 area. So if buy pressure persists here, that is if we see that sellers are finding it difficult to break down and we continue to see buy pressure above the structure, buying around this area will be making a lot of sense while we look to add more buy at the break above the $66.90 level. So let's mark this one out here, and of course if that happens, we can see price will have broken above this descending trend line, which we mentioned on Monday, also doubles as the neckline of that potential reversal pattern. So let's see what happens around this area. If buy pressure persists, we continue to look out for buying ideas and of course add more at the breakout of the $66.90 level. Now for me to sell, I would like to see some confirmation happen around this market, considering the fact that we are within a robust demand zone. Remember, I showed you something here on Monday. Let's go to the 4 hours time frame, and we talked about how the $66 area in the last 1 month had continued to be a strong buying niche. So for me to buy with the for me to sell within the $66 area, I would like to see a breakdown and retest of that particular structure before jumping into a sell. So even though we had a strong sell yesterday, I'm still hopeful that buyers could come into play at any point in time. And before we can join this decline, let's wait for confirmations to happen. So this is basically my view around this market going into the second half of the week. Thankfully, we are on the positive side of our portfolio as we are part of this uptrend scenario, scoping in about 100 pips thereabout before this bearish move happened. So let's see what happens today in the next couple of hours, or even maybe after the Fed reserve interest rate decision. So that is my view around the US oil spot. The $66 level remains a crucial area for us to monitor how price action will react to the structure. So I will be giving us updates on my Telegram platform if there is anything new that comes up around this structure. So that is my simple view on the US crude oil commodity. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So I guess we are all on the same page. So we've marked out structures here. So I did mention that the $66 area is a crucial juncture where we shall be exercising patience, waiting to see how the price reacts to this particular structure to determine whether we are buying or selling. All right. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY. And I think I still have a buy position running. Yes, I do. I still have a buy position running. Remember, we said we will be buying above the 149.00 right here, which we did. We had the buy stop triggered here on Monday. And since then, price has been trading above that level, though I have moved my stop losses to break even. And thanks to the weak Japanese economic data, the dovish Bank of Japan comments, and of course a small recovery in the US dollar had placed the price above the 149.00 for the third consecutive days. And of course, we saw a report from the from the Japanese economic docket, where the Japan's machinery order fell by 3.5% month on month. We saw that happen. Let me show you right here. Oh, I think that is the impact is much more lower. I only included the mid-tier and high impactful event here, but in summary, we saw the drop in the Japan's machinery order, and we also saw a decline in business sentiment according to Reuters reports, which reflect economic weakness in the Japanese weakness in the Japanese economy, making the Japanese yen less attractive at those points in time. Then we also saw the Bank of Japan this morning emphasize high economic uncertainty, and he also maintained the current interest rate at 0.50%. So of course, you can see it right here on Wednesday this morning around 2:25 a.m. UTC. We saw the interest rate decision from Japan coming in just as market had expected. So this is not coming as a surprise at all, and as a result, it makes the Japanese yen less attractive at this point in time. Then the US dollar is recovering. We saw a slight bounce in the US dollar index in the last couple of days, driven by pre-FOMC positioning as market participants strategically positioned themselves ahead of the Fed's interest rate decision, providing additional support to the USDJPY. So with the way things are going right now, I still want to maintain a bullish bias around this particular structure. Remember, on Monday, we marked out this ascending trend line, which is serving as the major driver of price action for this week. And you know how we use our ascending trend line. As long as price remains above them, we will continue to look out for patterns and structures that support buying ideas. And for the fact that price still remains above that structure, the bullish idea still remains very much intact, even if price drops at any point into the structure, just like it has been doing in the last couple of days. And I could attribute this choppy situation to the anticipation of the Fed's interest rate decisions as major key players step aside, waiting for this data to come in before making any aggressive bets. So it is quite understandable that we have this choppy condition. So I just maintain my stop loss around the entry point here, and worst case scenario for me will be break even if price action drops down below the 149. So at this point, we maintain a bullish bias. Price still remains above the ascending trend line, still remains above the resistance line for the week. The previous resistance line for the week had the 149.00, and there is still a chance the price will still come into the trend line to continue the uptrend move. So there is no panic for me around the structure. And if we consider the weak Japanese economic data, the dovish comment from the Bank of Japan's governor, I think that the path of least resistance for the USDJPY remains to the upside. So I will continue to maintain a bullish bias on this one. However, if we look at the narrowing US-Japan rate differential, the Fed is expected to cut rates several times this year, shrinking the interest rate gap between the US and the Japan, which could obviously weigh on the USDJPY in the medium term. This could incite selling pressure, of course. I will not take selling ideas off the table. You know how we do it here. And of course, if we look at the Japan's trade surplus, which also expanded, we saw, hold on a second, I think I saw it here. Yes, we saw it here. We saw it expanded. We saw Japan posted a 584.5 billion Japanese yen trade surplus in February, which was driven by an 11.4% year-on-year export surge. So a strong trade position also has a potential of boosting the yen as well, boosting the demand for yen. So it depends on how the market participants digest the incoming Fed interest rate decision, coupled with the tariff policy affecting the US dollar in the meantime. So we will not take out selling ideas from the table. And what are the conditions technically that will make us feel comfortable joining a sell? For those of you who have been with me for a while, you know what that means. We would like to see this ascending trend line breached and broken to the downside. So if we see a breakdown of this ascending trend line, definitely we want to be shifting our focus to selling opportunities. But one thing I would like to say here is, considering the potential reversal pattern we're seeing here on this particular asset, we would like to wait for confirmations to happen before we jump into a sell. And when I say confirmation, I'm talking about price action coming to a retest structure, maybe on our lower time frame. We want to see signs that buyers are finding it difficult to climb back above the ascending trend line, and this will reflect on the chart as continued selling pressure below the 149.00. Then we can join a bearish move. So that will be the only condition that will make me sell the USDJPY this second half of the week. But till then, we maintain a bullish bias here. We're looking forward to adding more position if price can break out, retest the 150.00 level, which happens to be the highest point price action has been for this week. So let's see what happens today. And I think about a couple of hours into the Fed interest rate decisions, major key players will start having inside information of what the Feds are likely going to do, and this will make us see how they will be positioning themselves for that event. So let's see what happens around the structure. Should I place a buy stop order here? I think I should do. So I will place a buy stop order above the 154.00 right now, as I still maintain a bullish bias since price still remains above the ascending trend line. So that is my simple view on the USDJPY for this week. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move into the final assets on our watch list for today. Stay tuned in. All right. So in the absence of none, I want to assume that we are all on the same page. So we still have our bullish position intact, and like you can see at the bottom of your screen, my USDJPY is still running in profit of about 43 pips. It's not really that much anyways, but like I said, I've moved my stop losses to break even. So worst case scenario, if price drops to the downside, I will be taking out at break even. So there you have it. Then I said we have a buy stop order above the 150.00 area, where we're looking to maximize the uptrend scenario if price breaks above that structure. And the only condition that will make us sell the USDJPY is only when this ascending trend line is breached and broken to the downside. So there you have it. I wish us all the best of luck on the USDJPY. So moving on to our final asset for the week. So it's my favorite again, the gold commodity XAUUSD, and of course we saw price hit another all-time high at a $3,045 level this week, thanks to Fed rate cut expectations. We also saw huge safe haven flow as geopolitical risk, including the rising Middle East tension and uncertainty over Trump's trade policies, continues to drive investors towards gold prices. This bullish momentum, I think, is still the tip of the iceberg, as we may likely see price continue further to the upside. However, if we consider the recent the rebound in the US dollar recently, we may likely see a cap in that direction, where price may do a little bit of retracement, where major key players who are part of this uptrend scenario start taking some profit off the chart. Then another factor that could limit the uptrend scenario in the meantime is the anticipation of the FOMC event, as traders may be very, very cautious ahead of this meeting, as any hawkish surprises in Powell's speech or the Fed's economic projection could slow gold's rally. So as a result of this, we may likely see choppy market conditions ahead of the Fed's interest rate. Now, to help us navigate this market, we want to be looking at the culmination of any form of retracement in the gold due to short-term US dollar strength or FOMC event volatility. And of course, we begin to notice that this morning, in the last 3 hours, we've seen price drop down from that all-time record high. Now, what we want to be doing now is to see how far will this retracement phase go, then look out for buying ideas to continue the uptrend move. And then we're also going to be and as a result of the FOMC event too as well, a more dovish tone could push gold even higher. So let's take note of that. Then the geopolitical tensions needs to also be monitored. We learned that the US is going to retaliate the Houthis attack, and if tensions escalate further, we may expect increased safe haven demand to drive gold prices higher again. So at this point in time, what are we going to be doing to navigate this market? Are we going to be waiting to see how far this bearish move goes? In fact, I missed out on this sell position this morning. I think I went to feed my dogs. Before I came back, that move had already gone significantly to the downside. I shared an update this morning on my Telegram TradingView platform as regards to how we are going to be managing these positions today, and I think I still have it here. It was on a 15 minutes time frame. For those of you who are with me on my Telegram and TradingView platform, you must have seen it. So this was what I shared this morning, as you can see here. So I was able to spot a couple of ascending trend lines. As you can see here, we have this trend line here, which has been broken and retested. And according to what I said this in my commentary on this update this morning, I said that we are going to be buying the break of the 3038 level, and then we're going to be adding more buy position at the break of the $3,045 level, which is yet to happen at this point in time. And I said that we will be selling the breakdown and retest of the 3035 level, which was exactly what happened. And as you can see, price has already moved over 100 pips. It's so painful I missed out on this one, and I hope you were able to capitalize on this. If you did, well done, kudos to you. Let's see how far this momentum is going to go. So if for those who capitalize on the breakdown retest of the 3035 level, I will be advising you right now to move your stop losses to maybe about 30 pips from your entry point, or worst case scenario, move it to break even, so that if price climbs back up, the worst case scenario is you being taken out at break even. Now TP for this sell will be along this trend line that we have here, which is going to be around the 3012. Let me show you how I got the trend line. So you can see after connecting the series of higher lows here, I have this trend line, which could become a platform or a bust up for new buys to continue the uptrend move. So that is basically what I am looking at the moment. And since price still remains below the 3035 level, we want to maintain this bearish bias at this point. So that is what we have here on the XAUUSD. I wish us all the best of luck on this one. If you have any questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery.